Hello traders, Cousin Benny coming to you from theclosingprint.com, February 13th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved lower, closing below their 200-day moving averages, with the exception of the S&P Equal Weight Index, which did bounce at that 200-day moving average. IWM did close positive, along with the FTSE, Nikkei, Hang Seng, and emerging markets. Most of our indicators are bearish at 10, with 5 neutral and 5 bullish. At the same time, there are economic implications of geopolitical tensions abroad, which have exacerbated movements in stocks in the energy sector, most of those populating the Stochastic Scan at the bottom of the opening monologue, along with commodity stocks, gold and silver, which show signs of follow-through this week. We're also trading in a negative gamma environment, and demand for protection or puts in the indices and the heavier weighted growth stocks, which all close lower as well, compounds the pressures facing the markets at the present time. Keeping in mind those additional pressures that are affecting the markets, we do see the S&P Equal Weight Index, which removes the weighting in those top 10 stocks that make up more than 28.6% of the S&P 500, did bounce at the 200-day. At the same time, the S&P 500 closed below its 200-day moving average. We did forecast a potential test of 1618 Fibonacci's taken from the high that we saw on Wednesday to the 200-day, and then extending that down, giving us a level of 4364 as potential support, though we do anticipate there's a possibility we test these lows back on January 24th, or these low wicks that we printed on Tuesday and Friday of the same week. We're also watching RSI, MACD, and Stochastics, all three moving lower, in addition to distribution days on Thursday and Friday. So it's with that in mind and the negative gamma environment that we're trading in, knowing that dealers will sell into weakness and they will buy into strength. Right now it looks like the markets are giving us reason to be cautious this week. The Nasdaq also closed below its 200-day moving average, rejected at that zone on Wednesday. The 21-day is below the 200-day as well. MACD continues to drop. So it's with that in mind that we decided to add to our hedges in QID, which moved higher as well. The New York Stock Exchange advanced decline also gives us reasons to be bearish and cautious, while presently we're just looking for retests of support levels at the 4300 level, together with the McClellan oscillator for the New York Stock Exchange, which did turn back down on Thursday, Friday, also suggesting we might be headed for this support zone, which has held over the last 9 months, together with a higher volatility reading last week on Friday. We did close off the highs of the session just shy of 31, with potential bullish readings setting up in the front month versus the 3-month volatility indices, which did push into the green zone, exceeding 1 or higher, which have marked lows in the past, with the volatility of VIX or VIVIX, the speed of the move in VIX right now is moving back towards that January 24th high. If it gets to that zone this week, we would be looking for buyers to show up for more than 1 or 2 days and for dealers to start buying the dip if this is just simply a retest of the January 24 lows. Therefore, the number one thing we'll be watching this week is VIX for a peak and reversal, along with an improvement in breadth across all major indices. Fundamentally, the market is also under pressure. That's obvious. Rising rates have a negative impact on valuations, so it's no surprise that we're watching the bond market or yield spreads, which haven't given us any reason to think that this is anything more than a retest of the January 24th low, with bond traders showing no concern at the present time, as we'd expect to see a spike if bond traders were concerned about default risk and risk in the markets in general for more than just a retest of the January 24 lows. That said, bonds have been catching a bid, so there is a possibility we could see the bonds start to move higher together with some consolidation in the 10-year yield rather than a push through 2% and accelerating. We're looking for price action to consolidate at current levels. We consolidated for a few weeks back in January, popped above that level, tested to 2%, and continued to show signs of consolidation. And with this weakness, started to see bonds being bid up on Friday. TLT did bounce almost 1.5%, with stochastics turning from oversold and MACD showing signs of a turn. We're also watching strength in gold and silver, commodities in general, as a hedge against inflation, with gold attempting a breakout on Friday, with the CRB index reflecting the persistent inflation expectations as we rose from the March 2020 lows, broke out of a 13-year downtrend, and continue along a bullish path. As commodities continue their bullish trend, we also see Brent crude catching a bid over the last 8 weeks into a ninth week and following through as political tensions keep crude oil on a bid, with subsequent bullish implications for energy stocks going forward. Given the current market state, we did see strength in metals and mining, media, leisure and entertainment stocks, along with energy, financials, and biotechs. Healthcare in general looked pretty good last week with some pockets of strength. We also saw the international indices about the same, with strength in South American countries, in particular Brazil, which we have a long position in. We're looking for a continuation, with strength noted in Argentina, Mexico, Chile, Brazil, with the weakest international market, Russia, which sold off pretty hard, almost 8% on Friday on above average volume, while Brazil continues its bullish trend, moving above the 200-day last week, while Mexico bounced off the 200-day, with commodity-rich Canada above all of its major moving averages. In the U.S., we'll watch for continuation in the strength that we saw last week in utilities, energy, oil and gas equipment services, while the remaining sectors remain below their 20 and 50-day moving averages going into this week of trading, with XLY, XLP signaling caution that we've been talking about for the last couple of weeks. All the moving averages turn lower, similar to late 2018 when the Fed raised rates 4 times. So we'll remain cautiously bearish going into this week. A large majority of the stocks that appear on the IBD 50, IBD stocks that funds are buying, stocks in the spotlight, and stocks showing relative strength lines at new highs are from the energy sector. You've got Callon Petroleum, EOG Resources, Diamondback Energy, Pioneer Natural Resources, Phillips 66, ConocoPhillips, CVX, ExxonMobil, Matador, and so on. Most of these are from the energy sector. With Callon Petroleum showing up on the IBD 50, looking for RSI to lead the way. Volume shows institutions have been picking up shares. Stochastic and MACD have turned. as the energy stocks in play continue to populate all of our lists and scans, along with metals and mining stocks like commercial metals continues its bounce, looking for a push back up to 52-week highs. RSI is turning, MACD is crossed, and Stochastics is above 80. Diamondback Energy back on the IBD 50, breaking out 52-week highs last week. We've got RSI rising on above average volume, MACD turning, along with Stochastic. Hess Midstream Partners, another energy related name, breaking out 52-week highs, volume picking up, MACD turning, Stochastics rising. Real estate related names, mortgage insurance related, NMIH Holdings pushing higher last week, looking for a breakout. Relative strength line is climbing. Earnings and sales increasing. Good IBD numbers and metrics with a 72% growth rate. Look for NMIH, which has been on the IBD 50 for several weeks, to continue along this bullish trend. Northern Oil and Gas, another energy name, pushing above its 921 day on Friday. RSI rising, volume increasing, Stochastics and MACD turning. Oneok, energy related, oil and gas, looking for a follow through. Oneok engaged in natural gas and IBD Market Smith Blue Dot scan with earnings scheduled in 2 weeks. Earnings and sales continue to rise, a growth rate of 14%. Looking for Oneok to continue this bullish path as relative strength line makes new highs, signaling a potential breakout of this descending channel. Phillips 66 Partners LP breaking out 52-week highs. RS line is above 80. Volume starting to pick up and Stochastics rising. Another name from the energy group. Regeneron Pharmaceutical, a push higher on Friday on strength in healthcare, pharmaceuticals, and biotechs last week. With the metals and mining group, SBSW continues to move higher, broke out last week as well. Looking for this relatively inexpensive stock to continue along this path. As SBSY breaks out, we also have relative strength line climbing. It does have earnings this week. Timber stocks like West Fraser also showing a potential for a breakout. Above average volume on Friday, MACD above its signal line, Stochastics rising, RSI above 50 and trending. Western Midstream Partners, another energy related name, breaking out to 52-week highs on above average volume, MACD above its signal line, Stochastics turning higher. Williams Companies looking good, oil and gas related, natural gas. Volume showing institutions have been picking up shares, looking for MACD to turn back up as a function of price. This one does look good. Williams Companies showing a cup and handle potential breakout above that recent pivot high. Looking for a follow through. It does have earnings in 8 trading days. Volume was above average on Friday. Looking for a follow through. The company is showing annual growth rate of 19%. With decent earnings and sales going into 2022 this year of $1.31 per share. FLNG, another name in the liquid gas related industry group. FLNG showing relative strength line climbing. It does have earnings this week, so this would be a short-term trade, if at all. Growth rate is 118% with a very big jump in 2021 into 2022. Earnings per share jumping to $3.25 this year for nearly 20% increase or 50 cents per share. Northern Oil and Gas also on the stocks that funds are buying. This list with Ranger Oil Corp also looking like it's going to follow through, along with Western Midstream Partners, Energy populating all of our list this week, along with metals and mining stocks like Alcoa, which was something that many of you were trading to start the week, with many of you taking the breakout on Friday 2 weeks ago, looking for a follow through last week. Baker Hughes showing up in IBD's stock spotlight group Following through, breaking out on Friday with RSI rising, volume increasing, MACD's crossed, and stochastics pushing higher. Additional stocks, Synovus Energy, CVE, breaking out as well. Volume picking up, MACD's turned, and stochastics rising, along with the larger oil and gas related names, ConocoPhillips, CVX, Phillips 66, and ExxonMobil all breaking out last week, with Susie and many in the trading room taking ConocoPhillips for a ride over the last couple of weeks. Halliburton also breaking out. Note relative strength, muscle on RSI. The trend is persistent. Volume shows that institutions have been picking up shares of this relatively inexpensive oil and gas related name. Hess also showing signs of a potential breakout. Volume picking up. Imperial Oil, 52-week highs, with MPLX also showing up on the stocks in the spotlight, with relative strength line climbing to new highs. We're looking for MPLX to break out with relative strength line at 94 and pushing higher this week, with MPLX in the midstream energy infrastructure assets industry group also showing signs of potential breakout. Relative strength line is at 52-week highs. Look for the trend to continue in MPLX, with recent earnings showing a nice improvement, forecasted to make $3.15 per share this year and $3.27 next year. Showing up on the IBD MarketSmith relative strength lines at new highs scan to end the week. Murphy Oil and Gas, bullish follow through, anticipated, volume increasing, MACD's turned, and stochastics is rising. Oxy, Occidental Petroleum, breaking out 52-week highs. Pretty obvious institutions have been present. Another stock on the IBD MarketSmith relative strength line at new highs on the breakout, Occidental Petroleum. Volume, very obvious institutional involvement, with earnings and sales dropping a bit in 2020, back up to $2.14 in 2021, and 2022 forecasted to increase 68% to $3.59. Viper Energy breaking out, relative strength line at new highs, along with Western Midstream Partners. And finally, we have the Stochastic Scan, where many of the stocks that showed up on the list were from the energy sector: Apache, Chesapeake, Canadian Natural, Callon Petroleum, Cheniere Energy, Denbury Resources, Magnolia Oil and Gas, Matador, Murphy Oil, all pushing higher, with stochastics turning from oversold. We also have Pioneer, Ranger Oil, and many other energy-related names forecasting a follow-through for this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, February 13th, 2022, with your weekend video newsletter. I'll send out a watch list later tonight around 11:30, 12 o'clock, midnight on the East Coast, around 9 o'clock on the West Coast. Be sure to check that out in your inbox. Otherwise, have a great weekend, what's left of it, and we'll talk to you in the trading room tomorrow morning. Take care, and we'll see you then.